Hello and welcome to Market Wrap, an initiative by ICICIdirect. I have with me Mr. Pankaj Pandey, Head Research ICICI Securities, to talk about the market this week. Hello, Pankaj, and welcome to the show.
Hi, good afternoon, Geeta.
Quite volatile week, I must say, with the big gap ups and gap downs that we saw this week. How has the market been?
So largely, I think with the kind of scare you see when the US markets are down overnight, I think relatively we have been sort of doing a lot more better job. So we haven't seen that kind of a sort of a decline in our domestic markets.
Mhm.
So that way, I think we are sort of holding up well. I think globally we are one of the still best performing markets, even from a 1 month perspective. If you look at, I think US is turning a bit volatile because now you have a challenge to TINA factor. So earlier the thought process was there is no alternative to equities there,
Mhm.
but now with bond yields inching up, you have some competition to equities from bonds.
Mhm.
So that way, I think there's some bit of a nervousness. But I think if you look at domestically, see last week we had seen a fall of about 600 points.
Mhm.
This week about 400 points, but yet markets have inched up about closer to 3 odd percent.
Mhm.
And the good part is that the broader markets still continue to do well. So if you look at mid caps, are still sort of making new highs for the past 5, 6 consecutive weeks. Small cap is also sort of done well, up about 4%, and it is still not made a high. So it is still down about 12 odd percent from the previous levels.
Mhm. If we talk about the sectoral indices, BSE Auto, FMCG, IT, Consumer Durable, Oil and Gas, they have gained between 2 to 4%. And the outperformer was the cement stocks, which did quite well this week, with Ultratech gaining around 12% in today's trade. So, your take on cement, and which of the cement companies would you recommend buying at the current levels?
So I think, see, what is happening is that in commodities, if you look at metal continues to sort of do well, but I think with the kind of moves what you see in metals, both are upside and downside, obviously there is a good element of risk. But I think with cement as a local commodity, it is far more less volatile, far more structural relative to domestic growth. So, which is where I think the positiveness is coming. I think Q3, if you look at, we had one of the best volume growth in cement. So about 13-14% was the volume growth, though pricing was flat. And largely the capacity utilizations have ramped up to nearly 83 odd percent. So compared to that, about 63 or 67 odd percent. And with the kind of infra push, what government is doing, I think cement within commodities is far more better play. Largely also because of the fact that while in steel you see a element of leverage or debt on the books of key players, in cement that is hardly the case. Most of the companies have very little debt on the books, so that way they are far more better placed. And I think in cement we like most of the lot. So Ultratech obviously is a pan-India player, so remains a key beneficiary. And then JK Lakshmi Cement is something which we like. So they are operating at 90% capacity utilization. They're looking for a capacity expansion of 2.5 million tons. And then small cap space, we like something like Sagar Cement, where we have a target price of 900. So it's a south-based player now panning out in central India. So that way, they are also sort of diversifying geography-wise. So I think cement as a space, if somebody is looking for less volatility or less adventure, I think that is a better place to be into.
Mhm. And finally, we have news on Bhushan Power, which now goes to JSW Steel. How big is this news for JSW Steel and for the banks who are going to get their money back?
So I think largely it is sort of factored in. I think for JSW, I think they will have to recalibrate in terms of the kind of capacity expansion which they were intending. So in case if they were not getting this, then they would have gone for a greenfield capacity expansion or a brownfield one. But with they getting this, I think probably they'll have to recalibrate, and which is what we are sort of expecting in terms of announcement, both from Tata Steel and JSW, in terms of the kind of capacity utilization or capacity increase what they are going to look at. But metals have done well, so and continues to do well to even our surprise also.
Mhm.
Number wise, they have been sort of doing very well. Last quarter was one of their best quarters. But our sense is that somewhere down the line, it's not a one-way street all the time. So I think with metal, one of the best performing, whether you look at it from a 1 month perspective or 6 months perspective, some bit of a cool off is needed. I think today we had seen some bit of a cool off. Probably next week also we might see some bit of cool off.
What's your view on real estate sector now? We saw DLF seeing a bit of traction. Also NBCC, a stock which was trading around 28 to 30 rupees is now 50.
So, see, in real estate, again, you are seeing some pockets where things have been pretty good. So, for example, Brigade in Bangalore market has done phenomenally well in the last quarter. And same is the case with Oberoi Realty doing exceptionally well. Also partly aided by the duty cuts what the state government had brought about. But in general, what is coming out is that the supply will get lower and the demand is still quite good. So we would expect that for next 1 or 2 years, we will see decent volume growth in pockets, but pricing growth will follow after that. So real estate is one of the sectors which has done exceptionally well. My sense is that good players who have sort of managed their balance sheet well, I think will keep doing well. I think NBCC for that matter, so it was a good company owned by, it's a PSU. Till the time you were sort of doing subcontracting work, making 6% margin, things were good. And after that, the business model deteriorated because from that, they have started taking projects on their balance sheet. And that is where the decline came. Otherwise, it was a good company. I think there's some normalcy which is sort of getting restored. I think the kind of mistakes what happened in the past will not sort of get repeated. So it's a sort of it is recovering that lost ground.
Let's talk about telecom space now. Bharti saw some kind of sell-off with the closing down today 5%. Idea is down 6.5-7%. Reliance has bounced back. I mean, that is the one which is doing well, which did well this week. What is your call on the telecom space? Is Idea or Bharti a buy at current levels?
So Bharti is definitely a buy because they've been sort of gaining market share. Plus, they've been maintaining their ARPUs. But I think, see, the bigger trigger in telecom was obviously the price hikes, which was expected in Q4, but that hasn't really come. And with the kind of new pricing Jio has come up with, it looks like that they're not in a mood to sort of hike prices or tariffs. So that way, I think probably the outperformance what we expected from telecom, I think it's sort of delayed. But nevertheless, we like the entire structural story because once 5G is there, the opportunity which gets sort of opened up for telecom players is huge. So it's a sort of a long waiting game, got a bit more longer. So that is what it is at this point. And I think Voda is still sort of witnessing a lot more challenges from the balance sheet front. I think an ideal way for them to survive would be to sort of be there in some markets, not a pan-India presence. But then again, I think it's still a wait watch kind of an approach. So because till the time you don't really get comfort on the balance sheet, I think it's a clear avoid.
Talking about BSE small cap, which has gained around nearly 4% this week, have you identified new set of small cap stocks that you think would do better in times to come?
So mid caps and small caps have been sort of performing on a similar territory, except for the fact that small caps has yet not made a new high. But yes, we find a lot of stocks where we expect that things could become a lot more better. So for example, if vaccination drive is going to sort of persist going forward, you'll see far more normalization happening, and which is why hospitality players, something like is expected to do well. They are quite good on the balance sheet side, hardly leveraged. Then I think, we've seen IT sort of recovering a bit of a ground this week. So mid cap IT is also what we liking, or small cap. So something like Birla Soft, which is available at 15 times forward basis. So we like that stock. There we have a target price over 310. And then we like something like PNC Infra because in road, our sense is that while this year NHAI is saying that they will be able to tender out 4,500 odd kilometers, See, the opportunity pie or the tendering pie next year is going to be even more larger, to somewhere about 8,500 odd kilometers.
Mhm.
And mind you, these KNR and PNCs are two good players on the roadside. So we like both these companies. These are smaller cap companies. So I think so. These are the kind of names we like. There are not many, but this is what I can sort of come up with now.
Mhm. Talking about the banking space, Bank Nifty saw a bit of correction, decent correction till now. Time to enter, re-enter rather.
So banking, if you look at PSU banks in the last 3 to 6 months, have done phenomenally well. I mean, largely most of the entire PSU banking index would have sort of doubled. Contrary to that, private sector space has witnessed a bit of a sort of a cool off. Our sense is that you will see private sector space now sort of catching up, and largely because one on the asset quality side they are a lot more better. And then our sense is that from here on you'll see credit growth inching up to at least nominal GDP growth rate of 14-15 odd percent. So, which is a very good kind of a growth, and which is why something like Kotak Bank, HDFC Bank look attractive. Smaller cap banks, we like IDFC, First Bank. I think they've gone through their round of fundraising. They're sort of changing the color of their entire book, so from a corporate bank to a retail bank. So they're transitioning quite well. So we have been liking that stock for quite some time. We still like the stock.
Mhm. Crude surge again this week. It has been in news. What should one do? I mean, that is going to inch inflation, and then the yield are already going surging and moving higher. What is your view on the oil and gas space and the inflation front?
So crude, yes. So we were hoping that probably some bit of a voluntary cut, what Saudi had announced earlier of 1 million barrels, they might sort of restore. But they've chosen to sort of extend it by another 1 month. Our sense is that largely the upsides on the crude is capped because OPEC or OPEC Plus has still got about 7 million barrels of spare capacity to sort of increase. Because for them also, if the prices are too high, it becomes negative because it will start impacting their demand as well. Having said that, I think, I can't really comment about some of the PSU names because we have an investment banking relationship going on.
Mhm.
But generally, we prefer the gas space a lot more compared to the upstream or downstream space, because the opportunity pie in the gas space is far more better. So that way, I think Adani Gas, IGL, MGL, I think, and Gujarat Gas look far more better. Because typically what happens is that India's oil production has not been sort of increasing. So it is largely a function of the crude oil prices. And so it's a sort of a weak lever to sort of play for a longer period of time.
We had auto numbers this week. How did they do on the number front?
So auto numbers were largely on expected lines. We saw a good volume jump, especially coming from CVs. So that is a good positive surprise. I think buses are still sort of down. So that's but largely for some of the players like say Ashok Leyland, that is about 10-15% of the overall pie. So it has not really dented the entire CV as a volume. I think what we have seen is that in two-wheelers, the scooter as a segment is doing quite well, and largely because of the urban recovery, which is sort of panning out. Otherwise, four-wheeler has done well. So that way, numbers have been fine. But I think when you come to listed players, you have only CV players to sort of look at, which are looking attractive. Otherwise, I think we are quite structurally negative on Maruti as a stock.
Mhm. So, what are you watching for next week now?
So largely, I think what we are expecting is that market will consolidate at a higher level. So which is what we would expect for Nifty somewhere down the line, 15,500 to 14,500 is the kind of a level what we would watch out for. But I think broader markets are still looking quite attractive. So which is where I think mid caps, small caps will continue to do well. We have seen a bit of a recovery in FMCG, IT, and pharma, and our sense is that that will sort of extend. Beside that, you have infra names, especially cement, which is expected to do well. I think IT pharma typically does well towards the end of the quarter because then the result expectation starts building in. And depending on how the results come out, you see the profit taking or further extension of the rally which happens.
Yeah.
So for the next 1 or 2 weeks, I think IT and pharma and FMCG are looking good because see for IT last quarter typically December quarter is a weak quarter for them, and there also we've seen 3 to 5% kind of a dollar revenue growth, which is quite impressive. So if they're able to sort of sustain that growth, I think 14-15% kind of a growth or even higher growth. I think IT stocks with the kind of a muted performance in the last 3 to 6 months, I think they are good candidate for sector rotation.
Top picks in IT?
So top picks in IT would be Infosys, which is trading at about 25 times on a forward basis. They have seen good deal wins. I already mentioned about Birlasoft. In addition to that, we like Persistent. So these are the names which we like. Although in general, I think most of the stocks have been sort of delivering growth in the range of 13-14% and with a minor difference in the overall valuation. So structurally, I think most of the stocks are looking good.
Thank you, Pankaj, for your time. It was a pleasure.
Thank you so much.